Preparing for a tax consultant at Bank of America interview. You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share. And drop a topic request in the comments. Question 1. Walk me through your tax experience and why you want to work as a tax consultant at Bank of America. My tax experience sits at the intersection of compliance, provision support, and tax data analysis. I have worked on return work papers, reconciliations, book tax differences, and issue documentation. Bank of America appeals to me because the tax function operates in a highly regulated, complex environment where accuracy, controls, and judgment matter. I would bring strong technical discipline, comfort with deadlines, and the ability to explain tax issues clearly to finance, legal, and business partners. While answering, connect your technical tax experience to a large regulated bank environment. Mention compliance, provision, controls, data accuracy, stakeholder communication, and Bank of America's focus on responsible growth and risk management. Question 2. How would you explain ASC 740 to a non-tax finance stakeholder? ASC 740 is the accounting framework for income taxes in financial statements. I would explain it as two pieces: current tax, which reflects taxes payable or refundable for the year, and deferred tax, which captures timing differences between book and tax rules. For example, an expense may be recognized for books now, but deducted for tax later. ASC 740 also requires judgment around uncertain tax positions and valuation allowances, so controls and documentation are critical. Make sure to cover current tax expense, deferred tax expense, temporary differences, effective tax rate, valuation allowance, and why ASC 740 connects tax compliance with financial statement reporting. Question 3. What are common book tax differences you would expect in a large financial institution? I separate book tax differences into temporary and permanent items. Temporary differences reverse over time, such as allowance for credit losses, depreciation methods, accrued compensation, or deferred revenue. Permanent differences never reverse, such as certain penalties, meals limitations, or tax-exempt municipal bond income. In a bank, I would pay close attention to loan-related reserves, financial instrument adjustments, and state modifications. The key is reconciling each item clearly, from trial balance to tax return and provision. In your answer, talk about permanent versus temporary differences and include banking-relevant examples such as loan loss reserves, compensation, depreciation, tax-exempt income, penalties, equity compensation, and fair value adjustments. Question 4. How do you evaluate whether an uncertain tax position should be recognized? For an uncertain tax position, I first identify the technical issue and relevant authority, then assess whether the position is more likely than not to be sustained on examination. If it meets that threshold, I measure the benefit as the largest amount with greater than 50% likelihood of being realized. I would document the facts, law, assumptions, and sensitivity. In a bank, I would also consider reputational risk and ensure appropriate review by senior tax leadership. Be sure to mention the more likely than not recognition threshold, measurement of the largest sustainable benefit, documentation, technical authority, audit risk, and escalation to senior tax or legal teams. Question 5. Describe how you would review a corporate tax return workpaper before it is finalized. I would start by agreeing the workpaper to the general ledger, trial balance, or approved source report. Then I would review formulas, roll forwards, prior year consistency, and whether each adjustment is properly classified as permanent or temporary. I would investigate unusual variances rather than just accepting explanations. Finally, I would check that supporting documentation is retained and that preparer and reviewer sign-offs are complete. Good review means the number is accurate, supportable, and audit-ready. While answering, focus on tying workpapers to source data, checking formulas, reviewing supporting documentation, validating book tax classifications, investigating variances, and ensuring sign-offs fit a strong control environment. Question 6. How would you handle a discrepancy between tax provision numbers and the filed tax return? I would not assume the discrepancy is wrong until I understand the source. I would compare the provision workpaper, return workpaper, and underlying ledger detail to isolate whether the difference came from updated data, a classification change, or an error. Then I would assess materiality and determine whether it belongs in the return to provision true-up. If it affects deferred taxes, I would update the schedule. I would document the cause, resolution, and any control improvement needed. Make sure to cover root cause analysis, return to provision adjustments, materiality, communication with accounting, control implications, documentation, and whether the issue affects current or deferred tax balances. Question 7. What tax reporting issues arise from payments to U.S. and non-U.S. clients? Client tax reporting is highly data-driven. For U.S. persons, reporting may involve Forms 1099 and backup withholding if documentation is missing or invalid. For non-U.S. persons, Forms W-8, Chapter 3 withholding, 1042-S reporting, and FATCA status become important. The challenge is not just knowing the rules, it is making sure client classifications, payment types, treaty claims, and withholding codes are accurate. In a bank, weak data can create regulatory, financial, and client service issues. In your answer, talk about Forms 1099, 1042-S, backup withholding, Chapter 3 withholding, FATCA, CRS awareness, documentation like W-9 and W-8 forms, and data quality. Question 8. How would you determine whether a deferred tax asset needs a valuation allowance? A deferred tax asset is only valuable if the company expects to realize it through future taxable income. I would evaluate positive evidence, such as forecasted profitability and reversing taxable temporary differences, against negative evidence like cumulative losses or expiring carryforwards. Objective evidence usually carries more weight than optimistic forecasts. If realization is not more likely than not, a valuation allowance is needed. I would document the assumptions carefully, because this area involves significant judgment and auditor scrutiny. Be sure to cover positive and negative evidence, future taxable income, reversing temporary differences, carry-forward periods, tax planning strategies, profitability history, and the need for objective support. Question 9. What should a bank consider when analyzing state and local tax apportionment? State apportionment is complex for banks because income can come from loans, deposits, trading activity, services, and customer locations across many jurisdictions. I would first identify nexus and the applicable state filing method, then analyze receipt sourcing rules and any special financial institution formulas. Combined reporting and legal entity structure also matter. The practical challenge is getting reliable data by state. I would prioritize consistency, documentation, and clear reconciliation between tax calculations and finance source systems. While answering, focus on income sourcing, receipts factors, legal entity structure, nexus, state-specific bank rules, combined reporting, market-based sourcing, and reconciliation of tax data to financial systems. Question 10. How do transfer pricing concepts apply within a global banking organization? Transfer pricing ensures related entities transact as if they were independent parties. In a global bank, this can involve intercompany services, technology charges, treasury funding, guarantees, cost sharing, and use of intellectual property. The tax team needs supportable methods, comparable data, and documentation that aligns with business reality. I would also consider how transfer pricing interacts with regulatory capital, legal entity reporting, and local tax rules. Poor alignment can create tax exposure in multiple jurisdictions. Make sure to discuss arm's length pricing, intercompany services, cost allocations, funding arrangements, documentation, regulatory overlap, tax authority scrutiny, and coordination between tax, treasury, legal, and finance teams. Question 11. Tell me about a time you found an error in a tax or accounting process. What did you do? In a prior close process, I noticed a deferred tax roll forward did not agree to the underlying temporary difference schedule. I traced the variance to a formula that excluded one business unit after a new cost center was added. I quantified the impact, informed my manager, corrected the file, and added a control check comparing totals to the source report. The result was a clean review and a process improvement that reduced the chance of repeat errors. In your answer, use a clear situation-action-result structure. Emphasize ownership, investigation, communication, materiality assessment, correction, prevention, and willingness to de-escalate issues in a control-focused organization. Question 12. How would you stay current on tax law changes that could affect Bank of America? I would use a structured process rather than relying on occasional reading. That means monitoring IRS and Treasury guidance, state tax updates, accounting firm alerts, tax research platforms, and internal technical memos. For a bank, I would pay attention to corporate tax, information reporting, withholding, international tax, and financial product guidance. The key is impact assessment. What entities, systems, returns, provisions, controls, and stakeholders are affected? Tax law knowledge only matters when converted into execution. Be sure to mention monitoring IRS guidance, Treasury regulations, state updates, OECD developments, internal tax alerts, professional research tools, impact assessment, and translating technical changes into business action. Question 13. How do you approach working with business teams that do not understand tax technical language? I try to translate tax into business consequences. Instead of starting with code sections, I ask what transaction, product, or process they are trying to execute, then explain the tax issue in practical terms: cash impact, reporting obligation, risk, or system requirement. I use examples and confirm assumptions in writing. In a large organization like Bank of America, strong tax advice depends on collaboration. The best answer is technically sound and usable by the business. While answering, focus on simplifying concepts without losing accuracy, asking clarifying questions, understanding business objectives, using examples, documenting decisions, and building trust with finance, operations, and legal partners. Question 14. How would you manage competing deadlines during provision close, compliance filings, and audit requests? I would start by mapping every deliverable: owner, due date, dependency, and risk level. Provision close deadlines and regulatory filings usually receive highest priority because they affect financial reporting and compliance. I would break larger tasks into daily milestones, communicate constraints early, and escalate if timing or data quality creates risk. I do not sacrifice review quality just to move fast. In tax, a disciplined tracker and proactive communication prevent small delays from becoming control issues. Make sure to cover prioritization by risk and deadline, communication, tracking deliverables, breaking work into milestones, requesting help early, maintaining quality, and avoiding last-minute surprises. Question 15. How would you handle confidential tax data or a request that seems inconsistent with policy? I would treat tax data as highly confidential because it may include entity financials, client information, employee data, or strategic planning. If someone requested information outside normal access or policy, I would verify the business need, confirm authorization, and avoid sending anything until the control requirements were clear. If the request still seemed inappropriate, I would escalate to my manager or compliance contact. Protecting data is not just administrative, it is part of responsible risk management. In your answer, mention confidentiality, data access controls, need-to-know principles, regulatory expectations, professional skepticism, escalation, documentation, and alignment with Bank of America's risk and compliance culture. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.